Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Aggressive growth stock time once again with Bill Wilton, our aggressive growth stock strategist here at Zacks.com. And he's going to fill us in on a couple of stocks that are growing aggressively, I guess. Right?
Focus way to put it.
Yeah, Focus Media Holdings is one of those stocks. Now, this is a digital media company?
Yeah, what they do is they put up those digital displays that offer interactive advertising around China. They've got over 200,000 displays across the country. As we know, it's a booming economy.
The kiosks, is that what we're talking? Those little digital interactive kiosks that you see?
Those are like it's almost like a replacement for just a poster that you would see on the wall.
Oh, okay. Yes,
almost,
I do know what you're talking about now.
Yeah. Well, they've seen revenue grow 48%. They just reported quarterly results on August 22nd. Surprisingly, they're seeing an increase in consumer demand, and also, a lot of us forget about the impact that the tsunami had on Japan. Mm-hmm. Some of those automakers over there are starting to ramp up their spending, as they're getting back on their feet. So they're using them to advertise in the region. So they ended up beating on an earnings per share level. They've got a pretty good track record with that. So far, they've beaten in 4 of their last 7 quarters. That plus the estimates moving higher have given them the Zacks #1 rank. So we're now expecting earnings to grow 265% this year, with another 27% in 2012. So obviously there's a good growth story there. As far as the chart goes, you can see that the shares made a nice double bottom formation here, which is a good indicator that they're going to be heading higher. We've also got a bullish signal on the MACD showing that the stock does have some momentum moving forward here.
All right. VAALCO Energy, EGY the ticker, is an energy company you've been paying attention to.
Yeah, they're pretty diversified. They do both on and offshore, domestic and international, mostly exploration and production activities for nat gas and crude. They're having a great year so far. Their most recent quarter, they reported revenues were up 74%. Now, a lot of that is on higher energy prices, but they also saw an increase of about 11% in their demand for crude. So even though we are seeing higher prices, the demand has been there. At least it was last quarter. We're hoping it continues into the future as everyone starts to get worried about a potential recession. But that kind of makes this a bit of a contrarian play. Mm-hmm. If you do have the stomach for it, you could get rewarded handsomely here. You can see that the valuations on an earnings per share basis, we're trading at about 7 times those estimates, which is a great value there. Estimates are also moving higher for these guys. They're expected to grow 39% this year, another 13% next year. And here you can see a good long-term trend of those earnings estimates. Each of these colored lines, it's a full year's consensus estimate. They're moving up and to the right, which is exactly what you want to see. But we're also seeing the price really hasn't responded to that very well. So as the earnings move higher and higher and the price doesn't really react, that leaves more potential future upside for them. So you might have to wait a little bit, but this one could pay off in the long run.
All right. Do you own either of these two?
I do not.
You can check out more aggressive growth stock picks for yourself, as well as stock picks and other categories that we write about on our website, Zacks.com. You can link to them right off the homepage if you're not there already. With Bill Wilton, I'm Terry Ruffalo.